Let's get straight to this roller coaster market action, though, with Bespoke Investment Group co-founder Paul Hickey and JPMorgan Asset Management portfolio manager Phil Camporeale. Great to have you both here on what is another down day for the major averages. Phil, I'm going to start with you because it is just every headline it would seem we're getting around trade, tariffs, and discussions coming out of Washington, and maybe investor expectations around possible discussions out of Washington are moving the market right now. Does that continue for a while here?
Yeah, and very fast, Morgan. So it's really hard to trade these headlines and keep up with the headlines. We came into the year with about a 10% overweight to equity. We were pretty bullish. We were bullish on the U.S. What this policy does is just raise uncertainty around the growth and earnings outlook. So what does that mean? You take your equity overweight down. We took it from 10% to 5%. We've reallocated some of that overweight to places like the U.S. as well as developed non-U.S. and emerging markets. But Morgan, really important, this is happening at a time when the economy is coming from a position of strength. 4% unemployment rate, 3% GDP growth. Housing in this country, like people are still paying 4% on their mortgages that they refied in 2020 and 21. Corporate balance sheets look good. So the probability of recession really is not rising for us. So we just want to build staying power in the portfolio. That's an overweight to equity and still an overweight to high yield. And at the end of the day, Morgan, it doesn't seem like it, but we're 44 days into this presidency. So it's impossible for us to make these big, grand conclusions about what the presidency is, particularly because part of the mandate are lower interest rates. And that lower interest rate story, I think, paves the way for the good stuff that people were excited about this presidency, which is the fiscal and the deregulation side. And that story is yet to be written. So we're still overweight, low probability of recession, and the economy is still operating from a position of strength.
Sounds like you think growth scare fears are a little overblown here. And to your point, we've seen the 2-year, 5-year, 10-year yields all at the lowest since October of 2024. I mean, the VIX did spike here today, Paul, but want to get your thoughts on the market action that we are seeing and whether we even fully know what tariff impact could actually look like here.
No, I mean, anyone who says they know what the impact of it's going to be is, lying to you. It's in the short term, these things have a life of their own. But to touch on what Phil was saying just a second ago, he mentioned the word uncertainty. Target CEO Brian Cornell was on this morning, and I think every other word out of his mouth was certainty, as in there is none. There's no certainty around tariffs, no certainty around taxes, no certainty around the economy, no certainty around rates. So it's just this stew of uncertainty in the market, and it's going to cause people to be on guard. You couple that with, we had a nice intraday rally today, and then I think, President Trump, every time he speaks, it's like Fed Chair Powell, the market goes down lately. And so now he's going to be speaking for 90 minutes tonight. I think investors, we bounced off the 200-day and then getting into the close said, who knows what's going to come out tonight, and are, took profits, or not took profits, but reined in risk again. But the bounce at the 200-day was somewhat encouraging today, but the NASDAQ did that Friday, and look what happened the next 2 days. So, in the short run, I think you just want to be cautious. But these types of pullbacks, 5% from an all-time high in the S&P 500, it's happened 64 other times since World War II. So, right. I mean, it's not that uncommon.
Phil, looking at the market action today, the rally off of a low after the president took some action, and then it didn't hold. It just reminded me of Friday. Is this a replay of Friday? Are there patterns here in excitement or at least reaction to what the president has done and how long that holds?
Yeah, I think, John, that these 200-day moving averages are important. So I'm not sure about the pattern from Friday, but what I do know is that there's $7 trillion sitting in money market funds. I brought that up on your show before. It continues to go up. It's like nobody's listening. And I think that $7 trillion in money market funds, I think there are people just waiting. And you saw the price action in NVIDIA, for example, today, right? People just waiting. That was higher. Yeah, and people just waiting to say, okay, here's my chance. If, at the end of the day, they feel comfortable putting that money to work. And the other thing is rates. Rates are so important here, John. Like for President Trump to say that he wants rates lower. 10-year rate goes from 4.8 to 4.15. And the Federal Reserve went from barely 1 ease priced in this year to now over 3, I think is so important, again, to the other part of the narrative that people were excited about, which is the fiscal story.
But if you get an inflationary trade war, can you do it?